Welcome to our informational webinar today. Today we will be discussing seller financing. My name is Kelly Shaw. My business partner is Trevin Rasmussen, and we are principal brokers in the Bristol Group. Let's get started. Seller financing. What is it? Although this is a basic explanation, sometimes it can be confusing. When a business is being sold, there will be three components to the actual purchase price: the down payment, the financing provided by banks or other sources, and the financing or seller carryback provided by you, the business owner. Will you be required to provide seller financing? The simple answer to that is yes. Only about 10% of all transactions are all cash transactions, and they're generally smaller transactions, less than $100,000. How much should you finance? This is hard to say, but I'm going to give you a general rule, and that is that roughly 25% of the purchase price should be a down payment from the buyer. 50% should be provided by bank financing or some type of outside financing. And generally 25% is a carry or a seller carryback of some portion. Now, this can vary widely based upon the qualifications of the buyer and your willingness to work with them and the availability of financing. Sometimes I have seen sellers carry back 70% of the purchase price. At other times I've seen them argue to only carry back 10%. It's based upon a number of circumstances, but the guideline that I just gave you is pretty generic in the industry. What terms and conditions? We highly encourage all of the people that we represent that on their seller carryback they do not do an interest-only financing option, that they do some type of term out, whether it is a full term out or not is your choice, but that you are having the buyer pay down that note that you are carrying. Many times they will amortize it over 5 or 7 or 10 years, but give the buyer an option to balloon pay that at the 3-year, 5-year, or 7-year mark. Whatever it may be, you need to think through those terms and conditions to ensure that the payment is sufficient enough that you are satisfied and it does not penalize the buyer to the point that they can't successfully run the business. What you want to have happen is you want the buyer to succeed so that he can pay your note. Will you be secured? Yes, in most circumstances you are secured, but keep in mind you're in a second position behind the bank. The bank will come in and provide financing and take the real estate or the inventory or the equipment or whatever it may be, and they will file the first lien. You can file a second position on all of that if you'd like. In some circumstances you can get a first position if there is no outside bank financing or if specific items are held outside of the sale and secured. But you will have some security. We encourage all of our sellers to remember that terms and conditions are frequently more important than the actual sales price. How you set up payment, the interest rate, the payment terms, what is secured is very important on an ongoing basis. Again, we remind you to please check out our website at bristolgrouponline.com. We are happy to answer questions for you. We can be reached at 208-319-3800. You also can purchase a copy of our book there for $14.95, The Complete Guide to Selling Your Business. You'll see it on the website. It's packed full of information that you'll need to plan for your sale, whether it be now or in the future. It comes highly recommended and reviewed, and we encourage you to get a copy of that. Thank you for your time today.